Forex trading strategy session. It's the 2nd of February, 2016. It's a Tuesday. Means it's a great day to be alive. It's one of those days when you're begging for the yen to get weak so you can catch your swing. We'll cover that technically. But without further ado, let's clean the studio up and get ready for some pips, huh? Boo! Eat a boo boo! You gotta put the pip in the picnic basket. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Iran just reported that they're going to target 2.3 million barrels per day. Beginning March, I love that. Beginning in the fiscal year, March 21st. Are you telling me the Iranian fiscal year starts March 21st? That just sounds funny. You know, I'd start like April 1st if it were me, but anyways, stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that treats you right, treats you fairly. You place an order, we put it in the market quickly without drama. Don't worry, mama. And we do so at very reasonable cost. Why do we want to do this? Because we want to be your business partner for many, many years to come as you build your successful Forex trading career. These sessions are every day, 7:30 in the morning, Monday through Thursday at Forex.Today, Forex.Today, Forex.Today. And every Friday at FXStreet.com. So, without further ado, let's get to the charts, yo. You see the charts all right? Everything good? Yeah, someone asked about cheap oil. Yeah, oil did drop. You know, it's Tuesday and then Wednesday and then Thursday. You know, all these oil inventory reports and gas inventory reports, they start coming out. And guess what? The world is probably betting that those reports are not going to be good. Seems pretty reasonable to me, doesn't it? We don't need that there. Hang on. Ciao. Okay. So here's let's back this out a little bit. Okay. So we had an upward move, as you can see, in oil. I don't know if you remember, but we identified this 382 to 618 Fibonacci retracement as an area to buy. Oh, yeah, look. It went from 32, which was our buy zone, and it peaked out at 35, almost 36. Good job. Nice trade. High five. But then it topped out at the 1618. What more would you expect? Probably not much, right? And it's come back around. And it just, you know, maybe sort of like it did before, early in the week down, and then at the end of the week maybe back up. Okay. So, yeah, so oil inventories. So guess what I did yesterday? I downloaded the EIA and the IEA and the EAI. There's two organizations. They both have the same letters in their acronyms. But the actually three. Actually, I downloaded the BP Outlook and the EIA and the AIE or whatever outlooks, not just for this year, but all the way out to 2040. Isn't it amazing that the energy industries gather this information, which is important because transparency is one of their mandates. But they look at everything from technology to production to supplies, you know, to known supplies and assumed supplies, and and they look at demand and the economy globally and the supply chain, and they come out with this big report giving you like a 20-year outlook on the oil industry. And you can get it not from just one source, but multiple sources, and then see what they agree on and see what they disagree on. Fascinating. This is what I did yesterday. I was reading all these, fabulous, fabulous reading from the industry. It's pretty cool, right? I have a lot more to read, but anyways, that's what I do with my free time. Yeah, I live like a rock star. So anyways, the first of the weekly reports, right? A minor report comes out today, the major report comes out on Wednesday, and then I think there's a nat gas thing on Thursday, but I think by then it should be green light. So I think maybe bad news today and tomorrow. Bad news meaning just more supply, less demand, the stuff you should expect. And then maybe that stuff dissipates Thursday and Friday and Monday of next week. So, down for the next 2 or 3 days and up for the next 2 or 3 days. What do you think? Does that seem reasonable? Just putting it in the context. So I think if you're going to try to buy this again by the end of the week, you got to pay attention to this swing here. Okay. Well, Oren, it depends whether you're trading cash, right? The cash market or the futures market. Now, if you're trading a futures contract, you're going to have something different versus like this cash derivative. Okay. Same thing with the S&P 500, right? You have you're going to have a price for S&P options on the S&P, futures on the S&P cash derivatives of it, and so on and so forth. Okay. There's normal spreads in these things. So anyways, pay attention. We're at the 50% now, right? So anyways, an interesting spot. Is it ready? I don't know. We'll, right? Set it up. So kitty CAD, if oil is going up, USD CAD should be going down. I got a question yesterday about did the correlation break, because oil was down and yet, this USD CAD didn't move. But yesterday, US dollar was also weak, right? We had, what was it? We had some horrible news yesterday anyway, so the dollar got weak. Time when, the Canadian dollar wasn't necessarily strong. So, you would think, you would have thought maybe, if oil was falling, USD CAD goes up, but not necessarily. Okay. Did you want to buy this in here? This is USD CAD. I was looking at kitty CAD yen. Did anyone try to catch that 4-hour 21? I'm looking at it right here. Let me pull it up on the screen. All right, that's the 5-minute 21. There, down in here. And I'm still kind of interested in it. It still looks like it's going to come down and tickle it. The fast-moving trends are hard to catch, right? So you kind of got to be quick. We're past the 50%. Like if I mark up, sometimes I do this, guys. I mark up my 50% line on the oscillator and use that instead of like the 20 line. So hang on. There we go. Let's do this properties. Okay, and I just make that 50. That gives me the midpoint level. Okay, and instead of waiting for it to overcycle down past the 25 or 20, however you have it set up, I look for 50% and then have it roll up. Okay, so like even though it's not oversold sort of traditionally, anything below 50 moving back up off the 21 EMA on the 4-hour is fair game to me. Okay, so put it this way. If the trend is strong, why would it become oversold? Does that make sense? Why would it become oversold if everyone agrees the trend is so strong, right? So you kind of have to be, that's when I say you have to be more aggressive, that's one way of being more aggressive and saying, well, it's not 85% oversold, it's only 55% oversold, but it's turning back up and I got to buy it. Okay. Oh yeah, you want to be the bear on this one, which is fine. Okay, and then the bear I thought was going to be higher though. Someone said they saw bearish on the daily. Yeah, you could mark it off of this. It's pretty close, right? But I'm kind of looking at it up in this way. So I think if you wanted to be a bear, I think what would be better for a bear, if I were to, put it that way, is more like that. And what's perfect for a bear is when the bulls have made their money and they just give up. They're just like, all right, good enough. I drove it up to 90. I'm going to take profit. And then the bears just unload fire for effect. Okay. Oh, the other thing that you can read, I don't know if you guys are interested in oil, but the EIA sends me like weekly and monthly and quarterly and annual reports. You guys read any of those? So like I just got one this morning on diesel fuel prices data. Stuff like that, right? So you can keep up, so you don't have to rely on, some newspaper or something like that. You don't have to read it in the Wall Street Journal and say, yesterday the smart people did all this kind of stuff. And you're like, well, what does that do me? What good does that do me today? So you can actually start getting data, like this is what the government has gathered and updated for me. Isn't that nice? Monthly number 2 diesel ultra low sulfur retail prices dollars per gallon, right? Look at that, they update it and they color it, and some human being probably sat around and that's what they did yesterday. What did you do yesterday? I put all this stuff in a spreadsheet that nobody reads. Yeah, cool. But thank you, EIA. But there's also an IEA. So I don't know if you're interested in stuff like that, you just sign up and there's some really cool reading. This was many years ago. I don't know, about 9 years ago. I really got into their data, and I started looking at annual peak levels for oil supplies and standard drawdown levels and I gathered a lot of information. So a lot of what I know, the stuff in here, I got from reading those reports every week, and I went from knowing nothing about the industry to a lot more, to learning a lot more and understanding a lot more. Okay. Okay, now, so that's that. So maybe a CAD yen moonshot would be neat. But you're right. Whoever said bearishness, yeah, nothing on this daily chart says bullish trend on the macro level. On the smaller level, you can see that we made the higher high, came back, right? Did a roll reversal, 50% retracement, and up into the next level. We're at a 55. The 55 now suggests a double bottom higher high or lower, higher low, higher high. Okay, return to the 200. That's what the chart tells me. But then once you return to the 200, which in the future will be kind of where I've drawn, then the macro trend is still down. So that's where it gets confusing, right? Or maybe on the smaller term, it looks very short term down, medium term up, long term down. And it's just that easy. Just reading Gino's question. Does it have to pass through the 50 of the Stokes when it is at support, or is it the 50? No, it's a judgment call, Gino. It's not a signal, so you don't use oscillators and stuff like entry signals per se. It's just information. So the only thing the stochastics is telling you, like this change, in the stochastics, is that these candles relative to the previous candles are making highs, not lows. That's what this turn means. But by the time you get it, you're already way up in here. So all it's telling you is whether it's, the candles are red, right? Not making new lower lows and then suddenly making higher highs. So you just got to put that in the context of your existing trade plan. Like, do you want to buy it at the 55? Right? You see what I mean? But you don't want to enter 4 hours later because you're waiting for a Stokes cross. You should have already anticipated and said, well, I want to buy it off this 55 because the 55 is going to double top, so I need to put this in here. The maximum up here, I'm going to make 100 pips. So down here, maybe I'll have a 50 pip stop. Comes down here. I'd like this to be oversold. It's oversold. Drop it in 5 minutes. I'll make it a cycle. Go along, and you're done. But waiting for it, I mean, again, it's lagging information. So you're only using it to say, is it oversold at support? Yes. Good. Move on to the next. Right? Next piece. That is drop into a smaller time frame, see if there's weakness on the smaller time frame that is going to change to an upside cycle. Well, yeah, front run, sometimes I use that language to Bista, right? Where I say, yeah, you want to front run the inevitable. Right? So your plan up here is to buy it at the 55 because the 21's dead, right? So if you buy it at the 55, that's cool. Actually, the way I had it drawn yesterday was more like maybe it was a different pair. Yeah, it was a different pair. Sorry, but in situations like this, I trade it like a range. I don't use the moving averages that way, right? Because if I was drawing a MACD would be falling, right? So why would I be buying if MACD is falling? But anyways, front running the 55 idea. What you say, is you want to buy it at the 55 when it gets near the 55, so it drops down near the 55. Then you say, is it oversold? Yeah, good. Therefore, 55 might act as support. What's the 15 doing? And I'm just like that. I'm gone now. I don't need that chart anymore. I'm near the 55. It is oversold. Is it rising yet? No, but that's why I need to that's how I make my money, to understand that it's going to rise, not that it did rise 3 hours ago, right? So then when you drop into the smaller time frame, I might be looking at this and say, wow, bullish engulfing candle, right? Bullish engulfing candle, bullish, 50% retracement, buy, and I'm here. Okay? You want to be long here. Like this. Okay? And this 200, I think we had it hourly, right? Is right there. See? That's how you do it. And you're down in here, not 3 hours after the fact. No, Gino. No, I don't believe. I mean, look, a lot of water's gone under the bridge, but what I believe is nothing's changed in my strategy. The book is exactly what I do today as it was then, and I had been doing that for a long time. I think what I don't talk about a lot in the book is multiple time frames. And to be frank, Forex was so new when I wrote that book that people couldn't grasp that. When I wrote the book, people were confused about selling Euro USD. You had to explain it. Well, you're not really selling. You're buying US dollar and selling euro. And you're like, but is it like selling a stock? No, dude. No, it's not like selling a stock. Well, how do you make money when you're selling? Okay. Well, let's talk about it, right? I mean, come on, 12 years ago or whatever, it was like dinosaurs running around, right? To be still. Right? You guys are so funny. All right, so in all my free time, you want me to bust out another 250-page book? Why? So I can make like 10 grand or something? Yeah. Dude, I don't have time for that. I mean, I don't have time for that. Put it this way, my track record's great, right? I wrote one book. It was a best-selling book. I don't need to write another one because what if it's not best-selling? I want a perfect track record, right? Yeah. No, I don't have time, right? I don't have time. I'm not going to write another book. I got great book ideas, by the way, guys. I got some great books in my brain. I just don't have time. I don't have time. Who has time? Let me tell you a funny story. When I was writing that book, and I was also writing for like 2 or 3 different magazines, I was doing regular columns and stuff, and I did a lot of TV interviews. I did a lot of web interviews. I was a busy boy, and one day I'm just like, oh, I'm so exhausted. And I noticed that a lot of these magazines, there was another person that was writing magazines all the time, right? Writing these articles over and over and over. And I saw her at like conferences, and then she went to a whole bunch of conferences I never went to, and I mean, just she was everywhere, just writing and writing and writing. I'm like, I don't know how she does it, right? So one day I'm speaking at a conference, and turns out she was going to be somewhere. I think it was the booth that was selling my book. Actually, there was like a portable bookstore back then. So, anyways, so she was going to be like signing one of her books at this book signing event. So I'm like, oh, you know what? I know those people. I need to talk to them anyways about my book. So I walk over there, and sure enough, she's there. And I say, hey, is so and so here? No, 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 no. All right, but oh, by the way, I have a question for you. I I I think you're doing a really good job, I said to her. I'm just really amazed at how much writing you do and how much public speaking you do and how many shows you travel to. I said it's really impressive, but how do you do it and still be able to stay tuned to the markets and trade every day? And she laughed at me. She said, well, I don't trade. And I'm like, oh my God, what? Yeah, no, I don't trade. I just go to I do seminars on trading. No, I just like I swear to you, I almost fell down on the ground in like a big wet puddle of mud. I'm like, oh snap! Then why am I working so hard, right? So, did you lose screen? I just downloaded and installed a new version of Adobe Air. An error just popped up. You got it? I have a feeling it's going to be frozen, but stupid technology. So, anyways, I thought that was pretty funny, guys. I don't. Time is my issue, not love. I love you much. I don't have time to write a 300-page book. Um, okay. Oh, okay. So here's another one that I find very interesting. Okay. So you should see a new currency pair. I don't know if you do. You should be looking at Aussie yen. It's got 1,000 lines on here that are from old trade setups. Let me move it out of the way. Are we good? All right. All right. So I didn't get the lift off the triple bottom. Well, I guess I did for only 6 months. All right. So let's go back into more now. This is a very interesting area that I was looking at last night, but we were still quite elevated. Did you guys watch the Aussie news? Guess what? They didn't raise interest rates. Okay. Okay. That's an area of interest, isn't it? Yeah, I couldn't, I'm still remembering that day where she's laughed at me. Well, I don't trade. Oh my God. Is that right, Artem? Look at you, Artem. Coming smart money, huh? I love the data. See, now you're walking around doing Wayneisms, right? Like, I don't care about opinions. What's the fact? Right? Right? Fact is 96% chance they're not going to do anything. That's all that matters, right? Cool. Good for you. I like that a lot, Artem. All right, so anyways, this is a very, 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 very interesting place to be a bull. Okay, it should be pretty obvious. You got the 21. Below that, you got a weekly central. Below that, you have a monthly central. Okay. Is it completely way oversold? Not at this price. So doing that previous trick, right? This is, let me move this to 50, right? There's 50-ish. So using the other trick, it's not way oversold, but if it turned up here, you'd see it and it'd be fine. If it dropped a little lower, right, then the oscillator, if price dropped lower, the oscillator would become technically, way oversold, which is good if you're a bull. But more importantly, you'd be right in this cluster, right? And it should be all good in the hood. There's only one caveat to that. Because M3 currently is the top, if you're a bear, the projected bottom is M1. If you're a bull, though, you want to buy it in here and drive it up to the red zone. So it just comes down to whether you're doing what you're supposed to be doing. If you're a bear, you would have sold the double top yesterday, right? That's it. You would have sold at 86. Your target would be 81. If you're a bull, you want to buy it at like 84.50 and drive it up to 88.50. And if you're neither of those, then you're clueless. So you got to be careful, right? But this traditionally is a very interesting level. If that don't hold none, as they say in Georgia, then this whole area, all of it's going to be interesting. I'm looking at that pivot cluster, but that's too far down, really, to be a bull. Oh, this could be a touch and go scenario. Let me mark this a little bit different. Let me add a little bit of color and flare here. If I flare this, M2 to M4 would be, it's a tough week to do that. See, I don't think that's going to happen. What I'm hoping, if you don't mind me throwing a little bit of hope in there, this is such a nice little setup that would actually indicate where you go up here. That is what I'm hoping for. I'd like the 21 to stay elevated. I'd like to stay above the pivot points. There's only one thing that disagrees with that, and that would be the M3 to M1 cycle, and that would take a lot of people out of the market. Okay. And was there anything hopeful in the RBA news? Oh, what? By the way, new record low for the Baltic Dry Index. Baltic Dry Index used to be 3,000. It's now 300. Yeah. Good job, Baltic Dry Index. Record low. What does it all mean, Basil? That's not good for commodities. Okay. And we're looking at a commodity currency being long here. It's just, I know it's a little dangerous. Okay. What I'm always hoping is that, it's almost like being, I don't want to say a kite runner, but let's say like flying a kite. You're walking around and you're going to try every breeze, just hoping there's enough to catch the kite. Okay? So I look at Aussie yen or anything with a yen on it, and if I can get this to fly up, I just want to try it. Okay. No, we didn't get great news out of Australia. No, the macroeconomics haven't changed. No, nothing's really good. But a 2% carry with negative deposit rates and quantitative easing going on in Japan, I still want to be smart about it. Like, I still want to buy at support. This is the 4-hour 21. It is a place to buy, and this is a place to buy too. I want to buy it even if I know it's mediocre at best, but it's almost like a Hail Mary. Maybe a Hail Mary is not a good example, but let's say you're a baseball player. Sometimes you see a pitch, right? And you want to get a hit and get on base, but sometimes you know particular pitchers well, and you know you can hit a home run off this guy. You have a much higher chance, and so you're going to probably try to. You're actually going to try to hit a home run. You're going to try to knock it out of the park. And it's kind of like one of these things where, quantitative easing and negative deposit rates in Japan. All right, if I can get that week and catch an Aussie upside, even though Aussie's not great, I can catch that carry and okay, I'm going to take the shot. Even though there's probably a 90% chance being busted out of break even, if that's the case, I still take the shot. Right? It's almost like a jab. How about that? Okay. Jab, 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 knockout. Right. So Mark says if there's going to be a risk-off environment, but I'm not there yet. Remember my line in the sand I talked about, 3 or 4 or 5 months before we got there in the S&P 500 held perfectly. Okay, that tells me there's intelligence in the market. I'm not worried about the end of the world. The end of the world's not coming. Okay. One thing that's interesting, and we talked about it maybe a year ago, I said as we move into a world where the Fed is raising interest rates, we're going to lose the buy anything idea that quantitative easing gives you, right? And when you get a scenario where the stock market's been bid up based on quantitative easing, what I used to call free money rally, once you get to that elevation, which basically was 2015, we basically moved sideways, right? Then what happens is now you actually have to do your job as a money manager. And money managers rarely have to actually work, right? But now you actually have to pick a stock, not just any stock or any sector, right? Now you actually have to say, which bank is going to produce more profits and a higher return. Is it Bank of America? Is it JP Morgan? Is it BB&T? What's BB&T? Small regionals, right? So are you getting into, are you buying, regional banks, local banks, and all this kind of stuff? Are you scouring through thousands of banks to find out which bank's going to, and that's hard work, takes a lot of time. And that's what money managers are going to have to do now, not just, buy an ETF that buys anything in the finance sector, right? So we're back to stock picking again. Hey, look, the sun's coming up. You can see my desk now. So anyways, I would like, now, let me fire up my drawing tool. Hopefully that doesn't, mess things up here. But look at the chart. Is there a trend? I was mentoring somebody last night, and I asked basic questions like, "What is the trend?" And they're like, "Oh, yeah, you're right." I didn't even have to. All I had to do was ask the question, right? Okay. Bottom. We can define this as a bottom, correct? Cool. Take the top across. It's the new bottom. But that's how you trade, right? That's the buy, right? Okay. And now what? The very least, right? We probably going to stay above that. Oops. And so my plan is something like this. Wouldn't that be great? If the daily chart wants to cycle down and take us to this lower low, this cluster between the weekly and monthly central, so be it. That's fine by me. Great. I'll just buy it down there. Don't worry about it, right? But right now, I'm playing the 4-hour, and that's an area of opportunity. What we're battling now is the 4-hour 21 versus the 4-hour 5. So if we can get this a little more oversold and then have it turn up, I'm long and gone. Flying my kite, earning pips. Right? And how high do I want it to fly? Until I run out of string. Right? So I might throw down like a 100, 1,000 OCO. What is that, your sister's name, Ryan? Just kidding, just kidding. All right. Enough. Poppins, get in here. Real steady. How'd you know? All right. Let's clean this up. Hang around downtown by myself, and I've had too much caffeine, and I've been thinking about you soon. All right. Little sideways action, hey, Brew? Okay. Wants to catch up to the 200 EMA and maybe reset? Or is this the beginning of the rally we talked about 9 months ago? What do you guys think? And what was the better news out of the UK? So 9 months ago, I predicted better than expected GDP numbers. More importantly, the World Economic Outlook from the World Bank. No, from the IMF. Isn't that interesting, guys? 9 months ago, we were talking about the IMF's report on World Economic Outlook, and then using a guesstimation process to estimate what first quarter GDP will look like out of the UK and have that incorporated in the IMF's unique economic data crunching process, which is very unique from everybody else. Gets that put in, and in April, the IMF gives a positive thumbs up for UK in the World Economic Outlook. That's pretty cool stuff, right? 9 months ahead. Is anyone actually planning to maybe read that report when it comes out in April? Anybody? Yeah? I mean, it's cool though, right? Don't you think? Talking about it so far in advance, putting all the pieces together. Like if these 19 different variables happen in a row, in order, in a world of countless variables, trillions of different variables that could occur, and then you all of a sudden, like, they start locking up together in a row, and you're like, right? It's interesting, isn't it? So I don't know what's going to be in that report. I ain't that IMF. I mean, think about it. We're guessing what maybe 1,000 PhDs are going to, what data they put into their, quantitative models and pump out some sort of number using their unique process. I mean, we have to guess what that is, the output of 1,000 PhDs using a unique process. But if you can do it, you're pretty good. So anyways, it's interesting. In, what was that, April, we were talking, or May or June, we were talking about in January, there'd be a change in direction for the Great British Pound from super weak to a new up cycle. So again, it begs the question, is this the beginning? And I can't answer that yet, because what I need to feel more comfortable with that, two things. I need a reversal pattern. That would make me feel more comfortable. But also, I'd like to know the data, because it doesn't pay to be smarter than everybody else when you trade Forex. It pays to be ready when other people are just figuring it out and you're ready to go. That's how you get paid. Okay? So please remember that. By the way, Ryan wants to get together in South Africa. Any South Africans want to get together? I'd fly in for 2 days and then go home. That's it. 1 day trading, 1 day seeing the land, catching up from jet lag, and then get back on the plane. Boom. But like soon, like in the next 45 days, right? In the next 6 weeks, meet up Johannesburg, 1 day trading, 1 day sightseeing, gone. We'll have a dinner, smoke a cigar, whatever. So I guess Ryan's going to look into it, right? There's going to be some sort of fee involved to cover basic expenses and all that kind of stuff, but, Okay. So we'll just keep going here. So that's that. Yeah, I think this is a good time to be in Johannesburg, right? Nice and cool, right? Only, what, 33 degrees Celsius? All right. So how about this? Do you have a particular currency pair you want me to get through? I'm just kind of lining this up. CAD and oil? Didn't I do those already? Boy, I must be getting old, man. I thought I already did all those. Tuive, Timmy. Pig dog? Didn't I do pig dog too? I thought I did pig dog. Well, how different is it going to look from the Aussie dollar? That's the funny thing. Maybe I am an old man, because, like, if I cover Aussie dollar, I'm like, well, we don't have to talk about anything else, right? So if you're going to buy dollar, right? So, like, here's USD CAD. Let me ask you, if you had a plan to buy this, right? Seems to me that is exactly what you want to see on a 15-minute Stokes, right? Right? Okay. Well, I'll get to the 3A2 part, but I'm just like, let's reverse engineer. If you wanted to buy USD CAD. Now, remember what I've been telling you is you can't make it up on this chart. You can't say, I think today I'll buy this. Come on, man. Right? So you should know when you wake up in the morning, I wonder if I can buy USD CAD today. I wonder if the dollar is going to go up. I wonder if Canadian dollar is going to fall. I wonder if oil's falling. Is oil falling? Oil is falling. Maybe CAD will fall. I mean, right? So anyways, you should know. I mean, it should be very basic stuff whether you want to buy this or not without even looking at your chart. But whatever. But then you decide, okay, you do want to buy USD CAD if you get the opportunity. Well, what does the opportunity smell like? Well, that oscillator should make you sit up and take notice, right? You should say, oh, dang! Wow! And at a psych level 2? Oy vey, right? What else is going on? It's a role reversal, right? Oops, come on now. Right? Someone else says, I think it was Guy, said, it's right in your pivot profit zone, which traditionally we mark up like this. Okay? It's when you set up your trades properly, and I hope I hope I'm not like getting you angry or upset or something. I'm just trying to drill home that we tend to add complexity by looking at 7,000 different variables and not taking a step back and just saying, what do I want to do? Does the trend agree with that? And is this the right time? Now, I asked you many times in the beginning of January, it's now the beginning of February, the beginning of January, to print out some bullet points on just one or two currencies. Do you want to buy US dollars in the next 3 months, yes or no? Put it in a bullet point. And why? Well, because of this and this. I'm talking about less than what? Let's say you take your time and think about it. 15 minutes worth of work? So what I was trying to get is for you to do something like, I want to sell Canadian dollar. Why? Oil's falling, and there's no likelihood that demand is going to significantly increase or supply is going to significantly decrease. So oil will stay low, right? Wow, revelation. But that's called your alpha. Why should I invest money into you? If you're a professional trader, why should I give you money to trade? Because I believe, based on my analysis, oil's going to fall or stay low, blah, 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 blah. USD CAD is going to go to 2.0. Do you guys remember me talking about something like that? That you sit down with some basic information and you convince me that it's going to go to 2.0. If you could do that, then good. Right? I don't know if it's right, but who cares? I don't care about you being right in the sort of like the strategy, because if your strategy is wrong, you're not going to get very many setups. So, if you'd taken the 15 or 20 minutes to bust out one PowerPoint slide to outline your strategy for two currency pairs over the next 3 months. I mean, come on, right? Remember I was laughing. I'm like, oh, I don't know, that's too much work. If you had done that and you said you're bearish on this Canadian dollar, you're bearish on oil, whatever, then this other stuff, the trading part, guys, becomes easy. So why do you delay? Because I sense that you're delaying, right? I don't see like 75 people saying, no, I did all the work, Wayne, I did all that, I did it, right? You're delaying your future. You're delaying your inevitable success. You're robbing yourself of your destiny. So anyways, if you wake up in the morning, and I have taught you to do this, right? Wake up in the morning and you're just like, I used to do the song, wake up in the morning and it's 1:45. What do? You sell the euro. You sell the euro. That worked for 2 years straight. I even have a song. And guess what? If you're going to trade the London Open, you have to wake up at 1:45. I mean, it's funny, right? So, anyways, it's called a strategy. How long are you going to trade without a strategy? I'm begging you to do anything, right? So, with all that in mind, there's so much going on here that if you're a bull, you would be long and you would be profitable right now. Yeah, you're probably only up 30 or 40 pips, but it's the beginning. Especially if you think it's going to 2.0 and you bought it at 140. Okay? You see what I mean? The strategy is the very most important thing. Okay? Right? So what about a mix of strategies? You may a month ago have said you're interested in selling yen and buying US dollars. Just simply based on central banking policy, right? Yen got ripper strong for about 3 weeks. Wouldn't matter to you based on your central banking policy strategy. Because at the time, the yen was getting strong, but it wasn't because of the central banking policy. It was because of a big stock market sell-off. Fine. Doesn't change your strategy. You just don't trade for 2 or 3 weeks, right? But when it does bounce, you become ready, right? Okay. 618 actually predicts a 1382. This only went to 121.4. So what you end up doing is then you create a new line in the sand, right? I should probably try this to measure it. Measure that move. And ideally, this keeps moving up. Okay? There are going to be hiccups along the way. That's cool. It happens. But if we can keep the US dollar strong, if we can keep the yen weak, this is going up. Well, what about a 4-hour chart? How does it look now for an opportunity? Okay, yeah, we're kicking off the 4-hour, man. Let me get rid of some of those horizontal lines. Object list. I'll show you just like this. Delete, 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 delete. That's how you do it. Isn't that nice, guys? So this bottom is a 4-hour 21, followed by a 1, 2, 3, chow. Could be the beginning of something beautiful. A fairly easy setup to catch if you're already a bull. Now, of course, if you're a bull, you're going to be very, 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 very worried about that 21, right? Because that's where a bear is going to sell. Well, that's why it's interesting when you have a strategy, even when you're wrong, what happens is you just don't get too many setups, or when you're wrong, you lose a little bit of money, but it's not a big deal because you know how, you can easily assess the risk associated with this setup. You know what I mean? Kill it, right? You know to get out, right? Does that make sense? Okay. But you notice there's some very interesting setups, wink, wink, nudge, nudge going on. Wink, wink, nudge, nudge. By the way, the S&P 500 is also tickling its 4-hour 21. Wink, wink, nudge, nudge. The euro yen's tickled the 4-hour 21. The pound yen is tickled the 4-hour 21. The CAD yen's tickled the 4-hour 21. The Aussie yen is on the 4-hour 21. The USD, so on and so forth, right? The USD yen's on the 4-hour 21. Wink, wink, nudge, nudge. Huh. And let me ask you, I'm pretty sure last week we talked about swing trading on a Tuesday. Now, maybe it was mentoring on that. I'm not sure. Does that ring a bell with anyone? Buy it on Tuesday, sell it Thursday, Friday. So, and a lot of people said, "Wow, I'm going to try that." Well, I'm just trying to point out, wink, wink, nudge, nudge, that I don't know, that there's a lot of things at the 4-hour 21. So you're either a little bit wrong or you're going to be very right. That's the thought process. If you do the right thing. Any thoughts or questions? Unfortunately, I still don't know how you place a stop loss when you enter. Really? Oh, well, okay, Gino, here's a place to start. Okay? Make it 150 pips. Yeah, 150 pip stop. Most likely that's a lot of money, right? Right, Gino? If you lost 150 pips on one trade, that's a lot of money. Am I right? Okay. Lower your lot size. Okay. And I want you to keep track of your trades. So do this for yourself, okay, Gino? First of all, the reason I say 150 pips is that's above the average daily range for all currency pairs. No, don't even worry about that, Gino. Who cares about that, Don't worry about it. Okay? Let me tell you. It's not a risk ratio. Come on. Who cares? Right? All right. But nobody cares about that, Gino. All right? All right. So here's what I want to learn. I want you to make a significant amount of trades, like 50 to 100 trades. Okay? Hendrik, it's more than the average daily range. So calculate it on the 17th decibel if you want. Look at the average daily range, and it should be more than an average daily range. Okay? So I'm not talking pips per se, I'm talking ADR. So if the average daily range on a big moving pair is 110, then 150 means your trade would have to suck so much that it would be wrong for a day and a half. You see what I mean? So what I want to know, Gino, is after 50 to 100 trades, what percentage of your trades are losers? And if 75% of your trades suck, and you lose money on, then you have a strategy problem, son, right? This has nothing to do with your stop placement and where your limit orders are. No, your trades are horrible. But at least we know where to start, Gino. That's what I'm trying to say. Yeah, use a demo. But it doesn't matter. You're probably over leveraged anyways, right? So you got to listen to me. Drop your lot size anyways. You're probably using 10,000% more leverage than a hedge fund. And hedge funds are crazy, right? I'll leave that to you, Gino. Just don't worry about, risk reward ratios. I'm not trying to measure that. Okay? But usually what happens is when I sit down and mentor someone, I look at their trading and they're a disaster. They're just a complete mess. And it turns out they have no idea what they're doing right, and it turns out they have no idea what they're doing wrong. And I have to spend some time figuring it out for them through, scientific methodology. So I don't know, 50 pips, do a 150-50. Terrible risk reward ratio. Doesn't matter. If you can't make I call that a putt, by the way. If you can't hit that 50 pips, then you got to, your trading is just horrible. You're entering at the wrong place at the wrong time for the wrong reason. You could be doing things like selling right off the top in the bullish market. Well, then good, you're going to lose 150 pips because you're the only person on the planet selling a rally, right? Well, don't we need to know that, Gino? Gino, I need to know whether you have a strategic problem or a tactical problem. Yes, Gino, 150 pip risk for a 50 pip profit. I'm not talking about risk and reward ratios. I couldn't care two hoots about your risk reward ratio if your trading loses money. Who cares? What is important is to know what to fix. Yeah, drop it down to a tiny lot size. Use a demo if it's too much money. But it's a strategy. You understand? I need to know your strategy. Are you even making good trades? Your stop loss is irrelevant if your trades are horrible. Right? And if your stop loss is 5 pips away, you're going to get knocked out doing the right thing. And if it's 25 pips away, you probably, and your entries are mediocre because you're waiting for a full Stoke cycle and you're in 3 candles late, well, then even your good setup, you're going to get knocked out on a 30 pip stop. So I'm like, I don't even know if you're doing anything right. So we need to figure out what's going on first, and we got to start with strategy. So you have to be horribly, horribly, horribly wrong to consistently lose 150 pips on every single trade or almost every trade you take. And if you are, then that else is selling, you're selling where everyone else is buying, and we'll say, you know what? We need to work on that Gino, okay? Gino has a problem here. Good. On the flip side of that, if you start knocking down these 50 pippers, then you don't have a strategy problem, right? Generally speaking, you're getting your 50 pips, especially when you let it breathe. You have so much room. You could be wrong for 18 hours and still get your 50 pips because you're stopped so far away. Well, then we would say, well, you're getting your 50 pips, okay, Gino? Most of the time you get your 50 pips, which actually might be an improvement for you because you're stopped so far away, you're not knocking yourself out early. So we might say, all right, well, 75% of the time you are getting the 50 pips. So if we continued with this, that would be a horrible risk-reward ratio. So let's work together, Gino, to figure out where your ideal stop-loss placement is and where your ideal target is, because strategically your trading is good, but tactically you've been messing up your own trade. So when you say to me, well, I don't know where my stop loss is supposed to be, Wayne, well, you know, that could be figured out. Okay? So I would do it with scientific methodology. All right. I would engineer it. Okay? But, you know, that's some of the things I'll do like in a mentoring or something like that. We'll figure out exactly what works for you. Okay? But again, your stop loss placement has to do with your strategy. Are you swing trading? Are you scalping? Is this a spot trade that you're going to be in for 2 hours? So like all of these things I can't just answer for you. I don't know what you're doing. But we can figure out your process and you can figure it out. But first of all, I need to know the quality of your trading because the quantity of pips as a stop is irrelevant. Okay? Okay? Now let me end this with one piece of advice. A loser trader, and I'm not saying this is you, but a loser, and you know these people exist, they're just diehard losers. They're going to use 150 pip stop to cover up their piss poor entry because they don't have patience and discipline to wait for the good entry. They'll say, well, it's 150 pips. Oh, that's more than enough. They'll just throw the trade down. And, you know, it's like a lousy carpenter doing crappy work, knowing that the painter's going to come in and hide all his mistakes. So you have to ask yourself, are you a cheap carpenter or are you an artisan, right? It's nice to walk in the room and say, ladies and gentlemen, I buy at support and I sell at resistance. That's the name of the game. So let's talk about trend. Am I a painter? That's funny. But but in all honesty, right? Don't use it to cover up piss poor entries. That's not the point. The point is you develop patience and discipline to enter your trades with skill. And then we can measure the quality of your strategy. Because then we can say, oh, well, why did you decide to buy the Canadian dollar? Oh, well, I thought oil bottomed out and it was going to rally back to 70. Oh, okay, well, let's talk about that. You had alpha. It might be wrong, but at least we could talk about that. Okay? But I want your trading, when you trade, guys, when you trade, you need to trade as perfect as you possibly can. What a lot of people do is they just throw down trades and trade. Let me try trading. I'm going to trade. I'm going to make a lot of trades. And it's like these people that go to the driving range at the golf course and hit 10,000 balls poorly. Like, dude, that's the 150th slice in a row. Yeah, well, I've been practicing slicing for a long time, right? That's... Okay? You need to practice being perfect when you trade. Every trade should be solid. And I want you to think that way. It doesn't have to be perfect in the sense like you're within 1 or 2 pips, right? Oh, I almost got that, but my order was 1 pip away. That's not what I'm talking about. What I'm talking about is waking up in the morning and you already have a strategy in mind and you can defend it. Why would you sell Canadian dollar? Well, look at oil. Why would oil go up? And you're like, we can talk about it. Well, battle me. Let's talk, right? So you have a strategy in mind. Oh, you want to buy the USD CAD? Good. Let's identify 2 or 3 levels of support in which you might want to buy. What does the oscillator look like? What does the 4 hour say? How does that fit with the 15? What time of day is it? When's London open? When's New York open? I mean, these are the right questions. But like staring at your 15-minute chart trying to figure out what it's going to do today, you got to get past that, guys. You got to really start to sit up and get serious. Right? Are you going to fight for it, guys? Or is this just a video game that you log into? Right? My kids like to log into YouTube and watch other people play video games. And the absurd part about it is the kids that play video games on YouTube make $1 million a year. It's amazing. But it's not a video game This isn't, entertainment. I'm trying to make you successful. And you got to break your habits, man. You got to break your habits and replace them with skills. Mike says he thought his son was abnormal for that. There's a guy called Stampy Longnose on YouTube. This kid plays video games. Okay? And he records about 45 minutes of it, and he's like, I'm having so much fun! And he uploads it to YouTube, and at the end of the day, I am not joking, he has 17 million views. I'm not joking. I'm actually serious. 17 million views. Do you know YouTube probably pays him $1,000 per million views? Yes. This kid makes somewhere between $15,000 and $20,000 a day working 45 minutes playing video games. So why don't you guys do that? Wow, that's a lot of money and keeping your clothes on. Woo! Amazing. It's absolutely amazing. It's absolutely phenomenally amazing. So anyways, you got to fight for it, guys. You got to really, if you want to be an expert and you want to succeed on the long run and you want to see trends come and trends go, macros come, macros go, like, things change. And that's why, as a professional investor, I look at multiple years of trading history because I want it to reflect not just the current trend, but I want to see how the trader behaves as trends come in, dominate, wane, reverse, new trends come in, and how does that trader respond and react to this data? Because it's all known data, both fundamentally and technically. Any idiot could make money selling Euro USD for 2 years, but then lose half of it when it rallies back up when that trade's dead. One-hit wonder, right? And who cares about a one-hit wonder? Are you going to be sitting here 10 years from now still trading? Well, then you need to change your behavior because you can't sit down and figure it out, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. And guess what? I will see you tomorrow because I'm here every day for you, okay? Yes, so, but let me remind you, we're trying to put together a trading day in Singapore. We're trying to put together a trading day in Johannesburg. We're trying to put a trading day together in Dubai. I think there's 3 people in Dubai, 3 people in Singapore, and one person in Johannesburg that want to get together. So I think each one of those events needs somewhere between 8 and 10 people, and then the cost is pretty reasonable. Yeah, no, I don't really do the expos and stuff, John. So to give you, an idea, I used to go to the expos in New York and Vegas. I did them multiple times a year, but I would drop somewhere between $20,000 and $40,000 on a weekend. And I'm just, I'm old, I'm tired. So for me, just flying in, hanging out with a small team, having lunch and dinner and trading for 8 hours is rewarding. I mean, that's it. It's cool, right? Sometimes it's good to just shake someone's hand, look them in the eye, and help them out. Look over their shoulder as they're trading on their laptop, and it's a good day, So, anyways, like I said, better than Detroit. Is Johannesburg better than Detroit? I've never been to either. So anyways, peace, guys. See you tomorrow and the next day.